What's up, people? Hello, dear traders. Hello, investors. How is everybody doing today? My name is Angie. I'm a financial analyst with Olymp Trade, and during this webinar, we are going to speak about the platform. We're going to go over some platform basics. We've reviewed the comments that you leave below our videos and the questions that you ask in chat, and we decided that today we'll take a look at a few things. We are going to discuss the multiplier on Forex, how to use it properly. I will explain what risk-free trades are, how to use them, and where you can get them. We are also going to touch up on time frames, and then we'll take a look at support and resistance levels. First of all, let's go ahead and check the sound and the picture. Please let me know in chat if you can hear me and if you can see me well. As usual, you can let me know what country you are joining me from today. You can let me know if you are new, or you can just put a plus sign as a confirmation. As always, my friends, I want to hear your feedback. If you come up with some interesting platform questions that you would like answered, please let me know by leaving a comment below this video. And of course, I want to remind you to make sure that you are subscribed. Give this video a thumbs up and ring on the notification bell so that you don't miss out on our releases, our live streams, and so forth. Alrighty, let me go ahead and switch to the platform. Well, no, let me go ahead and say hello to my friends in chat first. Ibrahim Mollah was first. Muscular Body hello is second to comment. Buddy Thing hello. Vishal Singh hello. Greetings to everyone. Very nice to see everybody joining in. Amir, thank you for the confirmation. Vishal, yes, plus signs. Morning, Angie, Cap. Well, yeah, good afternoon, good morning. Depends on where we are, which time zones we're in. Chai Chico is from Nigeria. Greetings. MD Rakib is from Bangladesh. Fantastic. Thank you so much for the confirmation. Alrighty, well, let's go ahead and switch to our platform, and then we'll get started. So I guess the first thing that I want to start with is I want to remind you that Olymp Trade offers two fabulous trading instruments. This is FTT, fixed time trading, and Forex. And there are a few key differences. Let me go ahead and tell you what they are. On FTT, so here's where you can switch. So if we switch to FTT, we have to predict if the price of an asset is either going to be higher or lower than the current price after a certain period of time. The certain period of time, it is actually called the trade duration. We can find it here. We'll talk about that in just one second. The main thing here is that it does not matter by how much the price changes. It can even change by just 1 point in the direction of our trade, and our trade will be profitable. Now on FTT, the profit is fixed. Remember, we can see it as displayed as a percentage next to each asset. So this means that if I enter my trade for $100 and my rate of return on Euro GBP is 80%, if my prediction is correct and the price moves even by 1 point in the direction of my trade, then my profit is going to be $80, and at the end of the trade, $180 will be added back to my account balance. So once again, the trade duration is how long the trade will how long the trade is going to close, and it is determined by us, the traders. As a general rule, you want to look at your time frame, and the trade duration should either be ×2 or ×3 your time frame. This means that if, for example, I'm looking at the 10-minute time frame, my trade duration should be either 20 or 30 minutes. Another thing to mention is that the maximum amount of time that the trade can be opened on FTT is 24 hours. There is no commission charged for opening trades on FTT. And since we are on the topic of FTT, let's go ahead and talk about risk-free trades. So risk-free trades are only available on when trading FTT, fixed time trading. And if you have risk-free trades, you're going to find them right here on the right-hand side in the trade parameters. There's like a little safety sign, so this like risk-free. And if you click on here, you can see how many risk-free trades you have. So basically, risk-free trade means that if your forecast is incorrect, the trade amount will basically just return back to your account. So let's say that I have a risk-free trade for $30. As you can see, my trade amount automatically changes to $30. And if I predict that the price of this asset is going to be, let's say, lower than this price in, let's say 20 minutes, according to my time frame. But the price actually, and I believe that the price is going to be higher, but the price actually starts going down. So basically, this $30 is risk-free. It's not going to be deducted from my account balance. So this is the whole point, the basic point of risk-free trades. Highlighted my chart. Oh well. Anyways, so risk-free trades, they come in different sizes. The easiest way to get risk-free trades is by completing the trader's way right here. We recently had a really cool challenge where we were trading different weeks with different statuses. It was really, really interesting. And so basically, as you complete the trader's way levels, you can get risk-free trades. So right now you can see that I have the expert status. And for example, right here, I got two $20 risk-free trades. And as you complete more and more steps on your trader's way, you can get higher risk-free trades. So like for when I reach this level, I will get three $50 risk-free trades. And I think the highest amount is you can get two $250 risk-free trades. Let me go ahead and send you a link in chat right quick. This is a link to the Trader's Way so that you can, if you've missed our previous streams or if you're just joining us for the first time, this is basically where you can get information on the Trader's Way, how to complete it, and which prizes are and bonuses and advantages are available on each of the statuses. And by the way, aside from the Trader's Way, you can also get risk-free trades as prizes during Olymp trade challenges, during our competitions and tournaments, and sometimes even during our live streams. Alrighty, so my friends, I do see everybody in chat. Greetings, everyone. So the next frequently asked question is, what is the best time to trade? I've heard this question so many times. Now, we actually just recently had a stream that was dedicated to different time zones and different trading sessions. This was, I think, was either last week or the week before that. It was with Yaroslav. I'm going to go ahead and send a link in chat, my friends. And by the way, if you are watching this video after the live webinar, you're going to have all the link hints, whatever, will appear in this upper right corner. Now, I think the main thing that you have to understand, considering the trading times, is that there are three major trading sessions. Okay, the day starts in Asia, in the Asian region, so like the Australia, New Zealand, and of course China and Japan and so forth. Which the day starts in the Asian trading session, which starts in the evening if we are considering the GMT time zone. As we can see, Tokyo opens around 11 p.m. Or midnight. Now, my friends, GMT stands for Greenwich Mean Time, but it is now often referred to as the Coordinated Universal Time, UTC. The way that I personally like to remember it, or I guess how I remembered it a long time ago, is that UTC GMT is basically the time, is the time in London. So this is how I remember. So, okay, so it's 12 o'clock in London, so it's 1 o'clock, 1 p.m. with me. So you just have to remember where you are considering the GMT time zone, and then either plus or minus the hours so that you can see when the sessions open. Now, I do say around in the evening or around 11 p.m. or 12 a.m. And I say this for two reasons. So after the Asian region, we have the European session, which opens around 7 a.m. Now, I say around for two reasons. First of all, because businesses have different working hours. So some businesses open at 7 a.m., some businesses open at 7:30 a.m., and some businesses may even open at 8 a.m. And likewise, some businesses will close at 5, 5:30, or 6 p.m. But this is roughly about the time that all the major big businesses, banks, financial institutions are open in these regions. The second reason that I say around is because of daylight savings. As the time changes in the spring and the fall, consequently, this reflects by an hour on the trading session opening and closing hours. And we can see that the United States session follows at around 12 p.m. And so again, the question is, when is the best time to trade? You have to understand that this largely depends on you. Where in the world are you located? So to see which times are going to be more comfortable for you and which assets you prefer to trade. Let's take me, for example, okay? I live close to the GMT time zone, and for me personally, it's not comfortable to trade during the Asian trading session. Personally, I need my sleep at night. So while other traders may prefer to trade the Asian session and skip the other ones. So some people actually wake up in the middle of the night, depending on where they are, to trade the opening, to catch the trading session open. So first, my friends, understand the time that you are available to trade and feel comfortable trading. You do have to, of course, take note that currency pairs such as the Japanese yen, the Australian dollar, the New Zealand dollar, stocks and indices such as the Hang Seng Index and the Nikkei are going to be more active during their respective Asian trading session. And the same thing goes for the European region and the Americas. I guess the last thing that I want to mention about the trading session is when the European trading session and the American trading sessions, they overlap. So they do have an overlap for about 4 hours, and this means that large businesses are operating at the same time on both sides of the Atlantic, so in London and in New York. And this is a busy time for trading, and that is usually accompanied by increased volatility. So my friends, from about 12 p.m. to about, I don't know, I would take from 11, I would probably focus around this area from around 11 a.m. to about 4 p.m., give or take, to catch really, really big moves during this trading session, if this is comfortable for you. So once again, my friends, if you want to watch the full webinar dedicated to the time frames, check out Yaroslav's recent stream, for which I sent you the link. Now let's go ahead and switch to Forex. Alrighty. So this is our Forex platform, and there are definitely some key differences. Number one, the profit is not fixed. The profit depends on how far the price is going to travel in the direction of my trade. There is a commission charged for opening a trade and also for keeping the trades open overnight, which is called rollover commission. I'll get back to the commission in just a moment. There is no time limit as to how long you can keep your trades open on Forex. And we as traders, we control when we close the trade. Now, likewise, another difference on Forex is that we have the multiplier. Give me just 2 seconds here. I should have probably checked in chat before I proceeded to Forex. JCODT, so which time for good trading in the Middle East country, once again, I would really advise for you to check in your local time what time the different sessions open. Why I say when the trading sessions open, because whenever the trading session opens, there is a splash of volatility, and different assets are going to be more active during different trading sessions. So you have to find it for yourself. There are a lot of different opportunities throughout each day, the 24 hours of trading. Feed Krish, I'm waiting for your reply. Let me same reply, Mr. Feed Krish. I'm from India. Which session should I prefer to trade? As far as I can see geographically, I would probably say, during the time when the London and European and Americas overlap, for example, this would be a busy time to trade, and I would probably catch the European session open. This would probably be the same suggestion that I would have for the Middle East as well. And Prasoon Das, about risk-free trades that you weren't during the Silver Bull Challenge, I would kindly ask you to please contact our support team, and they will be happy to check on that for you. I don't have that on this side. Alrighty, so let's talk about the multiplier, my friends. The multiplier. Let me reverse. So the biggest difference between Forex and FTT is the profit accruement. Remember, on FTT, it does not matter even if the price changes by 1 point in our direction, we will still have a profitable trade. Well, on Forex, our profit derives, like I mentioned, from price movement. So if the price is moving in a range, it's kind of moving flat, for example, like right here, and the price is just, moving around the price opening of our trade, then we're not going to be making any profit. Now, the next thing that I would like to mention is that you have to understand that the bigger the amount of your trade, the bigger the investment, the more potential profit you make, which, basically makes sense. And this is where the multiplier comes in. So on Olymp trade, you can find a multiplier as low as ×1. ×1 would mean that you are trading without a multiplier. And for currency pairs, for example, you can find the multiplier will vary from ×50 all the way up to ×500. What does this mean? This means that if I, 30,000, I don't even have that much. If I enter my trade for $100 and I'm using the 50 multiplier, this means that I'm actually trading with, it's as if I'm actually trading with $5,000. And if I choose the ×500 multiplier, this means that my trade is actually, it's as if my trade is actually $50,000. That's a pretty big difference, which definitely has an effect on our profit. Let me go ahead and switch to my demo account, my friends, so that I can show you some examples of what I mean. Alrighty, so this is just a demo account, my friends. This is just visually, this is not a trading signal. This is just me showing you how this works. So on Forex, I'm going to enter one trade with a 50 multiplier for $100, and I'm going to enter a down trade. And I'm going to enter one more trade with the same $100, but with a 500 multiplier. Enter down trade. I'm going to go ahead and set my take profit at this low that the price created. Just a second. Yeah, the take profit also, I'm looking at a very low time frame, the 5-minute time frame. Let me go ahead and switch this to somewhere higher. Okay, so I'm going to set my take profit for the trade with the 50 multiplier to this low right here. So I'm predicting, I'm forecasting, let's say that the price is going to continue heading down, and this is where I'm going to collect my profit. Let me just make sure that you can see my face. My head is not blocking the this area right here. So with the 50 multiplier, my profit on this trade is going to be $8.26. And this is a $100 trade. With the 500 multiplier, same scenario. I'm going to put the take profit in the same spot by this low. With the 500 multiplier, my my profit is actually going to be $84.20. So basically, yes, this is a very big difference. So here our profit is $8.26. And here in the same scenario, our profit is actually $84.20. But my friends, here is where we have to consider the flip side of the coin. What's going to happen if the price starts moving against me? Remember, on FTT, as you may recall, if the price moves in the opposite direction of our trade and the trade closes in the opposite direction, even by 1 point, you lose the entire trade amount. Not your account balance, but the trade amount. Whereas with Forex, you gradually lose the amount of your trade as the price moves further and further in the opposite direction. So whenever we use a lower multiplier, our trade has more room to breathe, means that your trade won't close if there are some unpredicted market swings, for example. Let me go ahead and show you this right now. Okay. So I'm going to set the stop loss at the maximum, minus 100 and minus 100, so that we can see them on the chart. Minus 100. Alrighty, so let's see. With the, one more time, I'm going to, the thing that we have to understand is that with a higher multiplier, the stop loss is going to be a lot closer to the price opening. So one more time, let's take a look at this trade. $100 with a 50 multiplier. Once the price reaches this level right here, we will get a profit of $8.26. Likewise, if the price moves against us, I'm going to have to probably switch to an even higher time frame. This is where I'm going to lose my $100. See, on the 30-minute time frame, I couldn't even see this level. But let me go ahead and switch. Let me try a 1 hour time frame. Let me see if I can see it on here. Just, okay, we can see it. I know it's a little bit small, my friends, but bear with me. So this is my take profit of only $8, but this is my stop loss. So basically, if the price does start to move against me, it's not, the trade is either not going to close, or the second thing that we can do is we can actually minimize our losses by adjusting the stop loss down. Let's say that I'm comfortable with keeping the trade open until the price reaches this level. And if it reaches this level, the trade is going to close, but I'm only going to lose $16 and not the whole $100. This is when we use a lower multiplier. Let's look at the flip side of the coin and look at the trade with the 500 multiplier. My friends, with the 500 multiplier, yes, my profit is going to be a lot more, $84.20. But if the price starts to move against me, it's not even going to reach the level that I'm comfortable with adjusting my stop loss. I'm going to lose the entire $100 when the price reaches this level. I hope that you can see it. It's a lot closer. So remember that a higher multiplier will bring you more profit. A higher multiplier means more risk and more potential profit. So you want to use a higher multiplier when you have a strong signal and you are confident in your trade. And a lower multiplier means less risk, but less potential profit. My friends, my recommendation to you is use a medium multiplier, such as the times 100 or times 200. With these multipliers, you have the best of both worlds. You can get substantial profit while keeping reasonable control of your trade. As a matter of fact, let's go ahead and enter the third one just so that we can compare. So with a 100 multiplier, if the price reaches the same level, I'll gain $17, not $8. And the stop loss, let me just show you right now. Oh, 1 second. Yeah, so you see the stop loss is a lot higher. So I can, with the 100 multiplier, I can still adjust it to about this area, minimize my losses, and still get a reasonable good profit. I do also want to mention that the trade amount and the multiplier have an effect on the commission charged. Go ahead and switch to my live account. So basically the trade amount and the multiplier has an effect on the commission that you can always see right here in the trade parameters before you open the trade. So $100 with a 50 multiplier, your commission will be $1.08. And a $100 trade with a 500 multiplier, your commission is going to be $11. So you have to take these things into consideration. And like I said, I would definitely recommend for you to use something in the middle, something like times 100 or times 200. Now, I have a link here to a really cool video on the 5 must-know trading orders on our platform. And here we go over stop loss, take profit, pending orders, and I think this would be a great addition for you guys to watch on this topic. Okay, I'm sending you the link in chat. Likewise, don't forget that you'll see a link hint will appear in this upper right corner if you are watching the video after the stream. My friends, the last thing that I briefly want to touch up on is levels of support and resistance. And just adjust my chart just a brief second here. This is just the daily time frame for Euro US dollar. Now, we've had several webinars before where we go over support and resistance. We've had short videos to full webinars, and understanding levels of support and resistance, in my opinion, is actually crucial for trading. I want to keep things as simple as possible. Firstly, support and resistance levels are target areas of where the price is likely to meet some kind of defiance. This is not a 100% price target. This is an area. Resistance means that the price has reached a point where the price is too high. So that, remember, resistance is going to be on top of the price. And support, on the other hand, is where the price dips too low. And meets defiance. So likewise, support is going to be below the price. Now, we can expect a few things to happen whenever the price reaches a level of support or resistance. Here are a few things that can happen. So the price can reverse and start moving in the opposite direction. For example, like the price reached this level of support, bounced from it, and started moving up. Or likewise here, the price touched this level of support and started to move up. The price, another thing that we can expect the price can do is the price can stall and start moving sideways. For example, right here. Now, yes, we do see some movements up and down, and the price does bounce and reverse from our resistance areas right here. But generally, as we see, the price is moving sideways. Okay, so we're not seeing like a massive move down and up, but more like a sideways. And we can also see a breakout for right here. And this was actually a very interesting moment from August to November of 2020 for US dollar. So it was trying to break this resistance. It was trying to get higher, but it couldn't. So buyers there were not enough buyers in the market. So people were not interested in buying at this price. So the price just, bounced, reversed from our level of resistance multiple times until right here, we finally had a breakout. And whenever the price breaks out, it basically breaks this level, moves beyond it. A lot of times it's accompanied by a retest. So it breaks beyond it, retests the level as the opposite. So this was resistance. It broke resistance, retested it as support, and then started moving up to the next level of resistance. Now, I guess that is the easy part. The biggest question is, how do we identify these levels of support and resistance? Now, there are a few tools that we can use. First of all, of course, we have our drawing tools, such as the horizontal line and the trend line. So these are my trend lines, and this is my horizontal line. We can find them in the indicators all the way on the bottom in this drawing section. Okay, the thing is that we as traders, we draw these levels ourselves, and each of us can have a slightly different vision of where we see support and resistance. But as a general rule, what you want to look at whenever you're forming your levels of support and resistance, you want to get, you want the price to touch this line or this level, the maximum amount of touches. You want this level to get the maximum amount of touches without the price actually breaking or moving beyond this level. So the way that we would draw our level of support is by connecting the lows. Remember, I said resistance is above the price chart, support is below the price chart. So by connecting the lows, the bottoms of the price movement, so you see the price dip down to support here, dip down to support here, and actually we're seeing a break of this support right now, which probably going to consider this a double breakout because first of all, we broke this local trend line. Well, they're both pretty global trend lines. Anyways, the price broke this trend line, and likewise, it broke this horizontal level of support as well. We did see that, it broke it, came back for a retest. Right now, nothing is really going on. But basically, you just have to remember that so whenever we are drawing our level of resistance, we get the maximum of touches of the price highs, okay? The maximums. And for support, we would connect the minimums, the bottoms of the price movements, okay? Now, likewise, there's a whole array of different indicators. Let me go ahead and take these trend lines down so that we can, it's going to be more visually pleasant. For example, we can use the moving average. My friends, the moving average follows, let me go ahead and put them on my chart. I'm going to go ahead and put 4 on my chart. 2, 3, 4. These are just simple moving averages. The moving average generally follows the price movement, and the moving average gives us insights on the trend direction as well as provides potential areas of support and resistance. Some of the more popular moving average periods are 10 and let me go ahead and change this to 20 for the short term. I would say 50 for the midterm, 50 and 100 for the midterm, 50 and 100 for the midterm, and 200 as like a really global, strong key level of support and resistance. So basically, let me go ahead and see, we're kind of moving, let me switch to a different time frame so that you can see. Well, this is a pretty good interesting scenario. The thing is that the price, okay, so the price is using this moving average. This is our 50 MA as support. You see that the price is not able to break below it. This is because this level is a strong level of support. Okay. Likewise, we can see that the price is now reaching the 200 EMA. So this is a global key level of resistance. So from this level, we can actually expect that the price is going to bounce down. Okay, so basically one of the tools that you can use, aside from the drawing tools, the trend lines and the horizontal lines, you can also use a moving average. The advantage here is that as long as the traders are using the same moving average periods and they are looking at the same time frames, you guys are going to be looking at the same levels of support and resistance. Whereas, the drawing tools, different traders can draw different ways. Now, my friends, another great tool is let me go ahead and switch to the 1 hour time frame. 1 day time frame. I'll go ahead and remove my moving averages so that they don't clutter my chart. And another thing that we can do is we can use levels of Fibonacci levels. And these tools, they also provide us with fabulous levels, potential target areas of support and resistance. Give me just 1 second so that I can, for example, one moment, Fibonacci. So we have this uptrend right here. The way that we use the Fibonacci levels is that if we had an uptrend that ended and we started a downtrend, we would connect it from the beginning of the previous trend, from the bottom to the top. And so this is if we are expecting and we are the price to move down. So our key levels are going to be the 23.6, 38.2, 50%, and 61.8. These are all levels of support and resistance. Another way that you can use the Fibonacci levels is you can, for example, drag it in the opposite direction. If we reach some key level of resistance, but we expect that the price is actually going to continue moving up instead of reversing to the downside, we can connect it from the top to the bottom, and we can actually look at this 1.236, 1.382, 1.5. So this is like, it's like the flip side, like the 23 and 6, 38.2, 50%, and 61.8. But this is where we can expect the price to reach the next levels of resistance. Whereas here, these are the next levels that the price is likely to reach as support. Now, my friends, I do have I have a bunch of links and materials for you today. Here is a really cool webinar that was actually dedicated to Fibonacci, where we go over the Fibonacci levels as well as the Fibonacci retracement and the Fibonacci fan. So definitely check that out. And there are actually a lot of other indicators that also show us levels of support and resistance. For example, like the Ichimoku cloud. I'm sorry, but Ichimoku cloud is one of my favorite indicators. Basically, we can focus on the clouds as support and resistance levels. And I do have a fabulous, very short 6-minute tutorial on the Ichimoku cloud. So definitely check it out, my friends. Don't miss out on any opportunities to learn. So my friends, let me go ahead and check to see how everybody is doing in chat. I know that we covered a lot of basics on the platform FAQs for today. I really hope that you will find this information useful when you are trading FTT and Forex with Olymp Trade. Mini stock computers, no risk-free trades for today. Kunal Patil, how to set trade time periods. I'm not clearly understanding the question. Do you mean the trade duration on FTT, or do you mean the periods in the moving average? Please kindly confirm. If you are referring to FTT, that was in the beginning of the stream, so definitely check it out. It's hard to draw levels on phone. Well, these may be some I really like to have a mixture. Whenever I'm like really studying the chart and I need to, identify key levels of support and resistance, etc., I usually do it on the computer. And then as I'm following my trades, I am looking at my phone to make it more easier and, of course, more compatible on the go. So yes, the time duration, the trade duration, I did go over this in the beginning of the stream. Basically, the thing that you have to remember is that as a general rule, your trade duration should be ×2 or ×3 your time frame. So if I'm working on the 10-minute time frame, my trade duration should either be 20 or 30 minutes. So this is like a general rule. Alrighty, Jamal Poor, hello. MDP Pyru, can you tell me Forex trading? Basically, we just went over the Forex as well. So if you missed it, please kindly check the video out after it's posted. Alrighty. Prasoon Das. So yes, the Fibonacci fan works in a similar manner. Let me go ahead and change this right here. Basically, let me go ahead and take it. You would find a low point. If the price is moving up, you would find a low point and then find a high point. And as you can see, the price is and remember, in the beginning of the stream, I told you these levels of support and resistance, these are target areas. So it's not going to be this specific line. It's going to be this area, but it is going to be that area. As you can see, you see how it moves in this channel, drops down to this level of support, moves up, moves down to this support. So basically, you can focus on all of these lines as potential. And right here, I love this, how it, well, this was our tip. Our top, so it broke below this level of support. So you can use these lines for potential target areas for support and resistance. I honestly don't use it as much as the Fibonacci retracement, but that's my, that's my personal, what is the word I'm looking for? That's my personal preference, not opinion. That's my personal preference. And Dr. Manojit Paul, how do you set stop loss and take profit by Fibonacci levels? Once again, I did send a really cool video in chat that was called 5 must-know trading orders on the platform. We go more in depth about the take profit and stop loss and stuff like that. But let me go ahead and change. Go ahead in just 1 second here. Just for a brief example. So let's say the price is going to reverse and start moving up. Let's say that my trade opening is going to be once the price breaks this level of resistance, this 23.6 Fibonacci. And if I open my trade right here, for example, my take profit can be slightly below the 38.2 Fibonacci. It can be slightly below in the area or slightly below the 50% Fibonacci. So this is how you would use this. And likewise, so let's say my signal is when the price breaks this 23.6 Fibonacci up. So I can set my stop loss slightly below the 23.6 Fibonacci level, or somewhere below the 1.16 Fibonacci level. So basically, you can work with that. Oh, Bidu Magdu, oh my goodness, could you explain price action? My friends, tomorrow, join Yaroslav live for a trading session that is dedicated to price action and possibly a special guest appearance. It's going to be really, really exciting. So that's tomorrow. That's 3 p.m. GMT. Oh, excuse me. That's 3 p.m. GMT plus 3, which is 12 p.m. GMT. So, my friends, if you have any questions that were not answered during the webinar, please go ahead and leave them in the comments section below this video once it is posted to our channel. I do want to, of course, as always, remind you to make sure that you are subscribed to our YouTube channel. If you enjoyed this stream, if you got some valuable information, please show me your support and give me a thumbs up. And don't forget to ring on the notifications bell. Thank you so much for tuning in. It was a pleasure seeing all of you, and I will see you next time. Bye-bye.